I'm Zita.
I'm Jared.
Welcome to our home. Come on in. I don't know why people think, or self-employed people think, it's harder for them to get a mortgage. I don't know what you think. I don't think it's harder to get a mortgage, but it's their income assessed differently. So they need actually advice and guidance to get prepared and understand how a lender will assess their income. I think that's the key thing, but I wouldn't say it's harder. It's just different, a little bit more complex. I agree.
Yeah, it is more complex.
It's a bit more simple if you're employed, but I wouldn't think it's. I think self-employed people often think, I can't actually get a mortgage. I did hear that a few times, didn't you?
Yeah, you need more of a track record. Generally, most lenders want you to have 2 years history of running the business, okay? Some lenders will look at 1 year's track record, but you may pay higher interest rates when they're looking at just 1 year in isolation. And the reason they need a longer track record is, a lot of businesses can fail in the first 2 years.
Yeah, I think it's 30% actually.
Yeah, 30%.
Looked at some stats, 30% of businesses fail in the first 2 years.
Yeah.
Quite a high number, isn't it?
It is a high number, and that's why lenders will be a bit more conservative in terms of what they need to see, than an employed applicant, because they're not running the business, they're not taking the risk, they're just, an employee of the business. Well, when you're running a business, businesses can be unpredictable, Sometimes revenue can be strong, sometimes it can be quite weak, or you lose customers and things like that. So that's why they need more of a track record.
Definitely. But also I think you don't really, a lot of people have their ambitions to start their businesses. And when I started the business 4 years ago now, it was a little bit unknown whether it will work out or not. It could have failed, or it could have, what happened, obviously it succeeded, but it was a question mark at the time, and it took a while until I built that up as well. So the first year looks very different to the second, third, and the fourth.
Yeah, absolutely.
And that's what happens. And what the lender wants to see is sustainable the income for that business.
Yep.
It's growing, it's profitable, and that's how they have the confidence of lending the money to the business or that self-employed individual.
Also, some businesses are run very tax efficient, okay, which is great if you want to save on tax. But if you want a mortgage, being a very tax efficient business can really have an effect on affordability and how much you can actually borrow, because a lender will only use what's showing up in your company accounts, on your SA 302s, and if you're not declaring everything on there, or if you're just running a really tax efficient business, you won't be able to borrow as much. Okay, so that's quite important as well, and I think a lot of people don't understand that.
Definitely.
I think they need to look out, at their current situation, and if they intend to buy a property in a few years, they need to make sure everything's being declared through the business.
Yes, absolutely. And I think the other misconception I come across with is limited company directors.
Yep.
They think that they are employed because they get their pay slips, and they often say, I'm employed my business, but they are self-employed.
Yeah,
it's just that you have the sole traders, you have the limited company directors, but either way, unless you have very small share in that limited company, then you can be employed. But if you are, a large shareholder, 50%, 100% limited company director, then you are actually self-employed, and we will ask for the same proofs such as tax calculations, tax year overviews, limited company accounts, and we will still look at the last 2 years track records. My conclusion on this, that we help a lot of self-employed individuals, don't we? So people should never think that, I can't get a mortgage because I'm self-employed, but get advice, because it's just a bit more complex and you need to be guided. And then it's absolutely possible if you
Yeah,
think ahead.
and a lot of different lenders calculate, self-employed income differently. They might take dividends and director's salary, or director's salary plus net profit. So it does
Exactly.
vary from lender to lender.
Exactly,
what makes it.
absolutely. So to maximize your affordability, you definitely need a mortgage broker, an expert, because they will know which lender is the best for you, how the lender can give you a bigger mortgage based on your income, because they will calculate your income differently. It's not the same with every single lender.
Yeah.
So that's a good point as well.